I've been doing a lot of backtesting recently and realized that an ascending wedge and falling wedge are some of the most reliable setups for good trades. So I decided to backtest these even more and formulate a strategy that has an almost 90% strike rate. Yes, that's right, 90% strike rate. So if you want to learn how to use this strategy, keep watching this video to the very end. In this video, I'm going to go through how to use the strategy, when to use it, when not to use it, and a couple of examples. So without further ado, let's go. Hi guys, it's Any, aka the NocTrader, your friendly neighborhood swing trader, back again with another video. Remember to hit that like button, hit that subscribe button, and hit that alert button to get alerts on all my latest videos. So what is this strategy I speak of? Well, it's all about ascending and falling wedges. As I said before, ascending and falling wedges seem to be very reliable setups to take, but I wanted to make them even more reliable. So what I decided to do was that I used a combination of smart money concept and retail trendline strategies and formulated this strategy that really has a really high success rate. So there's a lot going on in this chart, so I'm going to delete all of the drawings, and then I'm just going to show you a couple of setups that I saw where ascending wedges were really popular. So I'm going to clear this, and what we want to focus on right now is this area here as well. So this is the DAX. Now this strategy that I'm using, it primarily is used on indices. You can use it on Forex as well, but I found that it has it's mostly useful on indices. And what I'm looking for is ascending and falling wedges. Now I've fine-tuned my brain to really identify ascending wedges pretty well, just because I've been using this strategy for a while now. But what I look for is an ascending wedge such as this, something like that, and something like that. Now this is on the 1 hour chart, but this strategy works on pretty much any time frame, to be honest. Now, the reason why I would take a short on ascending wedge, as you know about ascending wedges, it ricochets up, down, up, down, up, down, and then once it breaks the support line, it will fall down, and when it falls, it will fall almost identical to where it entered. So what I mean by that is, for this one, if I go down into a lower time frame, let's say I go down to the 15-minute chart. So you look at so the ascending wedge looks a little bit cleaner here. And what you notice is that it ricochets up, down, up, down, up, down. Once it breaks support, it'll come back up, and then it'll sell off, and it'll sell off almost to the base of where it started. Now, what I wanted to do was really fine-tune this strategy so that I could get the most out of it. Because typically, if you just use retail strategies, what they want you to do is they want the support line to be broken first. So maybe, I don't know if you do it like that. Some people might do it like that. Some people might do it like that. But yeah, they want the support line to be broken first. And once it's broken, they want it to be retested. And that's where you'd make your entry. Now, with smart money concept, what I found is that if you go to the 1 hour chart, what I look for is a break of structure at the previous order block. So what that means is that for this, you'd see that this was like almost like a there's a line here, or you could even go to the 4 hour chart, but you go to the 1 hour chart and you can see here that this was the first bullish candlestick before impulsive move downwards that broke structure. So what you wanted is for price to retest that order block at the peak of the ascending wedge. So as this ascending wedge was forming, what I would do was that I would take a short. Where's the short? I'd take a short at the entry of the order block and set my stop loss just above the top of the order block, and then set my take profit at the base here. And lo and behold, that would have been like a 3-to-1. That would have been a 3-to-1 trade. Now you could even fine tune this even more if you want to go real deep. And what you do is that you could potentially find some confluence and find where that order block was started. So if you wanted to find out where it started, you could the minute that you saw that order block had been breached and then it started coming down, you could move your stop loss really tight because you know that once it starts selling off, it shouldn't come back on itself. Otherwise, the trade is invalid anyway. So then you can get even more a better risk to reward. So for example, I could set my stop loss just above like this trend line here, because really it shouldn't break that trend line if you're using smart money concept and retail trend line strategies, and then you could make it like an 8-to-1 trade or something like that. I hope that makes sense. So now I'm going to show you a couple more examples of how I use this strategy. So I showed you the strategy working on the 1 hour time frame, but the great thing about it is that it works on even on lower time frames. Like if you look at this area here, it just looks like noise, but if you go down into like the 5-minute time frame, what I saw was that the same thing played out again. So if I draw that trend line here, and I drew a trend line here, as you can see, the same thing happened. There was an order block created here on the 5-minute chart, and lo and behold, that is exactly where the price intersected at the top of the ascending channel before it sold off again. Now it didn't make a big sell-off, but it made enough of a sell-off that it kind of reached a level where you could have taken some profit here. Now, I didn't go all the way down to the base, but sometimes you have to look at the wider context of the trade just to realize where you want to take profit. Even if it came back on you, you could have probably just moved your stop loss to break even and taken a break even trade. But this strategy still worked here. So as you can see here on the high time frame, there was a big bearish move down, followed by a ascending wedge, and then it sold off again before climbing up. But you could have still made profit off this little move down here. And what I love about ascending wedges is that once you start to identify them pretty well, the setups are pretty good. Like this is another one that I identified. These are all DAX ones. So this is a chart that I marked up for trading I've been doing for a while now. As you can see on the higher time frame, on the 4 hour time frame, this big ascending wedge was happening, but it doesn't fit the criteria for our strategy. But look at that big sell-off that was caused by that ascending wedge. And then you go down into the small times, and this was the one I just showed you, the initial one. And then this was the one on the lower time frame. So it works on multiple time frames. So with this strategy, I found that it really works well on the 1 hour time frame, but as I said, it works on all time frames and on indices. Now I've backtested it thoroughly on indices, and it still works on Forex as well, but I predominantly found that most of my success with the strategy I found on indices. Now I'm going to show you an example with Dow Jones, which was traded in January. This was a setup I saw in January. In my back testing as well, that really showed that this strategy is a winner. So we're on the 1 hour chart right now, and okay, so prices started selling off. So what I've seen is that it's selling off. Nothing really happening right now, but here is where I started seeing that potentially ascending wedge could be forming. Now, obviously, this is early days. I would have plotted the line there, but we don't know yet until it starts really forming the ascending wedge, and this could be a potential point of interest. So at this point, I also drew a line here, and just waited it out just to see if this strategy was okay. So it's tapped it now. So this is exactly what I'm talking about, where it broke down, up, down, up, tapped a previous order block here, and then sold off. And if you had taken a short here and set your stop loss just above that line there, then you're onto a winner, and you could set your take profit. I would set my take profit at the base here, so where it entered, and then you could just see it play out. And look, that would have been a 12-hour trade. All right, so here's another US30 setup. As you can see here, there's been an impulsive move to the upside. Now straight away, I'm looking for, well, I don't know what I'm looking for yet, but as you can see here, nothing really is happening. Or I can't tell anything's happening yet until I can see like a, all right, so now ascending wedge is forming. as you can see here, kind of. I would have created this support line anyway, just to see, okay, something might be forming. This is just a support line at this moment in time. We don't know if it's an ascending wedge, but I would have just drawn these lines here. So this is all, you have to really have a good eye for just spotting these patterns. I used to trade a lot of retail patterns just based off of the old strategies I used to trade. So right now here, I would not have drawn this because I wouldn't have thought this is a ascending wedge, but I would still plot this line here as a potential point of interest, just because this is an order block right before a impulsive move to the downside that caused a breaker structure. As you can see here, this is the structural break, and this is the order block on the 1 hour chart. So I would have marked these up, and what you could do is that you can set a limit order, but I wouldn't set a limit order yet until I'm kind of sure that this is potentially an ascending wedge. So okay, now it's tapped into that area. Now you can probably confidently say, okay, this is an ascending wedge. Look at this. As you can see, these 3 points all touching. Once you get these 1, 2, 3 points all touching on the resistance line, and a couple points touching on support line, so you can confidently say this is an ascending wedge. This is where I would then take a short here. Now, as I've said before, on retail trading strategies, normally they'll say, okay, wait for it to break below the support, retest, and then sell off. But nah, you don't need to do that here, because with this strategy, once it hits this order block, that's when you want to take the short, and you can get an even better entry. So what I do again is that I take a short here. Where is it? I'll take a short here. Set my stop loss just above the order block, because if it breaks this order block, then the trade is invalid anyway. If it breaks this order block, and then set my stop loss at the base here. So that's a 6.8 to 1 risk to reward, and then just let it play out. So it's tapped in, and you just wait, and lo and behold, well, okay, here's a lesson for you guys. Maybe don't be greedy and send it all the way to the base. If it gets like this close, maybe you make it a little bit higher. So that's a lesson, because it came to where I wanted and it came up. So that's a lesson for everyone. You don't have to be greedy and take it all the way here, because look, it was just a little bit off. So maybe set your stop loss just above the base, because in the same way this is an order block, this is also an order block. So you may want to just kind of save yourself a little bit of a heartache and set your stop loss just a little bit higher. So that was a mistake on my part, because I didn't realize that you might be trading order block to order block. So yeah, if you set it a little bit shorter, that's a 6 to 1 risk to reward ratio. So this strategy works. I've back tested it, and I'm pretty confident in it, and it's got a really high success rate. So what I've identified from this strategy is that you want to trade it on indices primarily. It works on Forex as well sometimes, but there's so much fake outs in Forex that I prefer to trade it on indices. I think the best time frame to trade it on is the 1 hour time frame. And I'd say learn a little bit about smart money concepts and order blocks before you want to take this trade. What I've also identified is that you want to see at least 3 touch points on the resistance line. So here, what I mean by that is that you want to see at least 3 touch points. 1, 2, 3. That normally gives me confidence that, okay, yeah, this is an ascending wedge. But even if that's not the case, taking that short from the order blocks, you can get a really good risk to reward just from trading it, just from setting a limit order once you identify that this ascending wedge has been created. Set your limit, short it, and then take it down to the base, and you can make a tidy profit. So now on to when not to trade this strategy. Well, here's an example of a situation where you don't want to trade this strategy. This is the US100, so it's an indices, NASDAQ 100. It tapped inside of order block, ascending wedge was created. So yeah, this fits all the criteria, but this is why I wouldn't take this strategy. I'm going to show you in a second. So if you look at this this chart of the NASDAQ, it looks quite wicky, quite messy, but on the higher time frame, as you can see, it's really bullish. It's been making higher highs for quite some time, and it's just ranging upwards. So this chart is bullish on the higher time frame. And if you go down into 1 hour, 30 minutes, obviously you get different it'll have different directional biases based on the time frame that you are in, but on the higher time frame it is very bullish. So that's something you need to take into consideration for this particular setup. Now, in this particular setup, the trade was taken on the 1 minute chart. Yeah, it was on the 1 minute chart. So I'm gonna let it speed up and then get you to where the trade was taken. All right, so this is where the setup was. So I'm gonna go down to the 1 minute chart, and as you can see here, it looks quite messy. But to me, I saw an opportunity. I saw a potential order block opportunity here, because here there's like an order block, and here is the ascending wedge, something like this. It's quite messy because obviously on the lower time frames it gets real messy sometimes, but there was opportunities here, like if you look here, and so there could have been an opportunity for a short here. Now, while I probably would have taken it anyway, to be honest, it probably is not the best setup to take, just because on the higher time frame everything's quite bullish, so it might just be a little bit of a corrective measure that won't go all the way down to the base. But yeah, if you were to take a short here, the short will be taken from here. As you'll know, set your stop loss just above, and then try and take your profit around here. So that would have been 8-1, pretty good. And lo and behold, it just broke through the top and carried on climbing. The reason behind this is because if you look at the higher time frame as we go again, it was looking pretty bullish. Price had impulsively moved up, sold off a little bit, but hadn't broken structure and then lingered. And I don't think, just personally, I could see that there was a high order block on the higher time frame here that price wanted to react with. So it wouldn't have made sense for me to take a short there. So I think what you need to do with this strategy is just to take into consideration the higher time frame as well, even if you're going to trade on the lower time frame. But personally, I prefer to trade this strategy on the 1 hour, just so that stuff like this doesn't happen. Because once you go lower into the time frames, you're more susceptible to fake outs just like this. But yeah, this is the strategy. So it's the ascending wedge NocTrader strategy. I don't know, that's what I'm calling it anyway. And what you can do with this strategy is that you look for extended wedges, find the order block at the top, and short it from the order block, and that's where you can make some decent money. But yeah, just watch this video a couple of times, test it out yourself on indices, and let me know what you think. But yes, Any, aka the NocTrader, signing out.